This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Now, certain small unincorporated businesses sometimes elect to have their accounts prepared on a cash basis as opposed to an accruals basis. This means that instead of dealing with accruals and prepayments, they only have money in, money out. Now, to do that, they must make an election, and their 12 months receipts, their profits, so their income must not exceed 150,000. So they are definitely small businesses. Now, if they're between 150 and 300,000, then they have to leave the scheme. So it's basically cash receipts, money in, less cash payments, money out. So there are certain rules that need to change regarding that we need to be aware of. Capital expenditure. Okay, so capital expenditure on plant and machinery would normally attract capital allowances. Now, instead, any payments for plant and machinery is deductible. It's an allowable expense at the time that you pay for it, except cars. And plant and machinery capital receipts, if you sell something, that becomes an income and that needs to go in. Cars, you can either claim capital allowances or you can claim this flat rate of 45 pence for the first 10,000 miles and then 25 pence afterwards. The question will clearly show you one way or the other. And that's what you would prepare. Receipts, less expenses, gives you a trade profit. 3 lines. Now, if there is a loss under the cash basis, it says there, the only relief available to the trader is to carry the loss forward to set against future trade profits from the same trade. Very specific. Now, that's not as good as the relief that is available for normal traders. There's a lot of reliefs available for a normal trader who's using an accruals basis, and we'll deal with that in a separate chapter. So you have to weigh up whether or not you are going, if you are going to make a loss, then it might be better to do it on an accruals basis in the normal way. But if you're not going to, and it's a small business, window cleaner, for example, I have some private clients and I deal with window cleaners is one of them, and they're basically, it's the money they receive and they collect from cleaning windows less any expenses. It's a very small business. There are flat rate expenses that can be claimed for use of home, and the flat rate expenses will be given to you in the exam question. So it's an adjustment for your expenses such as food, heat and light, rather than attempting to compute the business split. Okay, there are some advantages to the cash. Now that, before we go into it, multiple choice question. Can you see that? That would be simple. What are the advantages of a cash basis? What are the disadvantages of a cash basis? So advantages, it's simpler because basically when the money comes in or the money goes out, you only pay tax when you've got the funds. So you've actually received the money before you pay the tax out, whereas on a normal accruals basis, you may not have done so. Disadvantages, main one is the losses. You can only carry it forward, and the expenses are only deductible when these are paid. So you can see that as a multiple choice question exactly. They don't come up very often in an exam because they are definitely after you adjusting profits. Definitely after you adjusting profits. But we have a question here for you to look at. And again, look in your BPP manuals and have a look into your exam kits. Not as common, but use, again, your common sense. If this is cash basis, you only include what has been received or paid. So Giles is a sole trader. He's elected for the cash basis. So you definitely need to be dealing with that. So he's got receipts he's received, bank interest, bank transfers from the customers that he's received. He's had some cash from a sale of machinery, so that needs to be included, and interest that he received from the bank account. And then he's got some expenses, cash payments for goods for resale, bank transfers for the purchase of goods for resale, some standing orders. He bought a car. There's a cheque payment for some machinery, petty cash, interest on a bank loan with total payments of $37,450. Now we also have a note here about a car with emissions over 50 grams per kilometre, which is used 60% of the time. Giles drove 15,000 miles and claims the fixed rate. So we're going to have a look and see how that all works. So let's have a lay this out in a pro forma. Again, heading. Make sure you head every pro forma that you do. What I would write here, from again, safety net, cash basis, so that I'm thinking all the time of what I need to do. So it's the year ended 31st of March 24. So his cash receipts. So he's got the cash that he had, which was 20,000. The bank income that he had from clients of 38,000. And the cash from the sale of the machine of 2,500. So let's just check that against the question itself to make sure. Okay, we have not included that. We have not included that because it does not relate to the trade. It's interest. It will be taxed in the income tax computation. Okay, let's have a look at the expenses. So we have cash payments and bank payments. We had standing orders because they're going to go through the bank, aren't they? Expenses that we have incurred, and we bought a car. Now, there's a reason we haven't put that in. I'll explain that in a moment. The machinery. Petty cash. We'll look at that in a moment. There's the interest on the bank loan. And the mileage. So we have 15,000 miles times 60% because he only used it there, times 45 pence, which he can claim, which is 4050. Those are all our expenses. Which gives us a profit, taxable profit of £23,250. The petty cash is not allowed, as there's one important word in there: entertaining. Okay, so that's not allowed. The car is not allowed because we've claimed this. Okay, so that's what's important to bear in mind. Now, with all of these, do the obvious stuff first. Do the stuff that you're confident about, because that will then help you then to do it quicker. When you do it quicker, that means you've got more time to stop and think about the car, the entertaining, the bank interest. Do all the obvious stuff first. So moving further on, we have our new section of this chapter, exam technique. This topic will probably appear in section B or section C. You will have to adjust profits for either an individual or for a limited company. Not so many in section A under multiple choices, but if you get one, it would probably look like this. So Fleur is a sole trader. When preparing her accounts, she had deducted the following figures. Gift of food hampers to 10 customers, a Christmas party for 3 members of staff, legal fees in respect of a short lease for £150, and an employee parking fine while on business. Okay, what is the amount that she must add back when adjusting the profits for the year? So I'm just going to give you a minute just to think about that. What do you think of those 4 she would need to add back? What do you reckon? Okay, well, she's definitely going to have to add the food back, isn't she? Party, entertaining client, entertaining employees is fine. Legal fees, that's legal fees, that's capital in nature, so that will have to be added back, and that one doesn't need to be. So the answer would be 600. Now, you may get A, B, C, D, tick, okay, which will be a variety of these, or you may get a box where you've got to fill it in. So, examination questions in section C. You may be required to put in a 0 adjustment for any items that don't need to be adjusted, which are the trade purposes and are allowed. Okay, this is the wording you will see. You should indicate by use of a 0 any items which are not taxable or deductible. Okay, it's highly examinable. Learn the pro forma and read the question carefully. Now, the rules for how individuals are being taxed, the basis period rules, have changed dramatically for this year. So we have been told and informed that that's why it's in bold, 23-24, sole traders and partnerships will be assessed on the tax year basis in the exams between the 1st of June 24 and the 31st of March 25, and an unincorporated business will always have an accounting year end either 31st of March 24 or the 5th of April 2024. They are coterminous year ends. Okay, very important that you're aware of that, especially if you are a retaker of this exam.